Hi Arun, hi Kunal. Kunal, are you when are you giving the level two? Hello, am I audible? Hello,
Yes, sir. Yes, sir. You're audible.
Kunal, are you there? Kunal, can you hear us? Hello, Kunal, am I audible? I think Kunal, your audio is not working. Can you just text and confirm because your audio sign is also not visible. Anyways, let's start. So basically, guys, CFA level two. This is the first class. Now, what we are going to learn today is basically we're going to start with financial statement analysis. I may not teach very long today because it is the first class. I primarily want to brief you on the program and just, get going. It's more like an orientation session today, and effective studies will start from tomorrow. I'll teach a bit today, but not much. So again, now level two is something which is you have an idea about it. It's not like it's completely new. It is just that the depth of the content is too much. The depth of the content is too much. So basically, um, if you are planning to sit for level two anytime in November, then this batch is correct for you. Our batch is targeting November and afterwards. We are not targeting August. Syllabus will not be done till August. I'm being very clear on the same so that there is no confusion for anyone. And yeah, we'll finish the syllabus by September end or August or October first week, worst case scenario. So somewhere by that time, we'll finish the syllabus. I will increase the classes after August. So after August, we will have 3 classes a week so that we are able to manage things because initially I will not take up so many classes. I want you to slowly get into the system of the syllabus. And then afterwards, at the end, I'll increase the pressure. So basically, that is a schedule. I think the schedule was also shared with you. So you must have received the schedule as well. Arun, did you get the schedule for the program?
Yes, sir. Yes, sir.
Yeah. Okay, great. Kunal, is your audio working now? Anyways, so basically, that is the overall plan. Now, make sure that you practice questions like in level one. I had told that practice from additional pack. Institute has launched the additional pack. If you're cleared in 2024 and studied from me, now, basically, if in level two institute does not have any additional pack, so there is a one is the material which you have, which is the you have received the books, Arun.
No, sir, not yet, sir.
Okay, fine, you'll receive it. You have joined recently, so for level two, so
Mm.
basically you must have received it. So once you receive the books and you get your CFA calculator, CFA calculator is already with you. Then once you receive the books, you will get the practice books of Squeezer, right?
Mm.
So make sure you use that practice book for reference and solve the questions. Apart from that, CFA Institute end of chapter questions. CFA Institute end of chapter questions. Like I'll just share with you on WhatsApp. 1 second. I have a full PDF where it's a summarized version. Like you don't need to hunt down every chapter's end of chapter questions. 1 second online. Yeah. I have shared it in the WhatsApp group. It's a PDF which includes only the end of chapter questions and answers. In case anything is missing, then you can refer to the CF Institute curriculum. But I don't think. But yeah, if some page is missing, some in the worst case scenario, then you can have a look at the curriculum. If you have registered for the exam in the CFA Institute login, you have the soft copy of the curriculum. So I would suggest just download the soft copy and create a a folder in your laptop and put all the files of the CFA Institute curriculum in that. Also, the PDF which I have sent you on WhatsApp, it is getting uploaded. So once you receive it, just download it and save it over there so that everything is in one place. Your practice style should be make sure you do the CFA Institute questions thoroughly from the end of chapter questions, and also the Squeezer material which you have got from that. All the practice questions needs to be done. So don't leave anything. Institute is not giving any additional practice pack, so uh, there is nothing additional available which you can buy and practice. So just the same sources which have been available for long, the Squeezer material and the CF Institute material, just use that. And yeah, follow the same style, read my notes, read the book, practice questions, same format. As in whatever I told you in level 1, implement the same in level 2. Just one thing you need to keep in mind, give more importance to the CFA Institute question bank rather than the Squeezer question bank, because CFA Institute question bank is much more relevant and of high quality. Squeezer is not that great, but that is the only material that is available easily. So yeah, but it has a lot of questions, so you will get good practice from that. So that will be enough. And again, 1 month before the exam, mocks are published. Take the mocks. So follow the same process. And yeah, read my notes thoroughly, because in my notes I've covered everything in detail. The problem in Squeezer is that, especially in level 2, they skip many things. So you will find the Squeezer book very, very summarized. My notes will be slightly extensive. So you can refer to my notes, parallelly refer to Squeezer and practice questions from the curriculum and the Squeezer material. That's all you need to do. Now the curriculum is big. It's not like level 1. It is huge. So every topic is lengthy. Every chapter is lengthy. Some chapters are, pretty much, uh, some chapters are so big in FSA that it can take 3 classes to just finish one chapter. It's that big. Like share-based compensation and employee compensation, intercorporate investments, multinational operations, analyzing financial instruments. All of these first 4 chapters are very, very big. So you need to be very, be ready with the same, that, okay, you have to be attentive in class and you have to attend all the classes regularly. Now, since this is our first batch of level 2, we have had a lot of successful batches of level 1, and we have launched our level 2 batch. So yeah, that is why we are going slow here, and trying to make sure that we add as much value as possible. So we have been able to achieve almost 100% pass rate in all our level 1 batches, and we are hoping we are able to add value in the best possible manner in level 2 as well. So that is the overall plan. Now, doubt sessions will be conducted as we move forward. Whenever you have a doubt, you can reach out to me. Same process, 48 hours maximum time I take, and I get you the response, give you the response. Usually, sometimes I can miss it out, but usually that does not happen. So if I miss it out, you can just remind me. So yeah, that is the overall idea. Now, I'll start with intercorporate investments. The structure is basically, I'll teach FSA, and then after FSA, I'll take up equity and corporate issuers, and then I'll move forward accordingly. So these are the 3 topics which you're going to do first: financial statement analysis, then equity, then corporate finance. And then after that, I think we'll start with quants. So that is the upcoming 4 topics in line. And then we'll cover the other topics. Ethics, there is no change. There's just a minor updation in ethics, but not a major change. So you don't need to wait for me to teach ethics so that you start practicing. Just start practicing ethics immediately. Same format, 20 questions every day. 20 questions every day. Read the book which you have on ethics. Just read it like a storybook, once or twice thoroughly. Don't try to skip things thoroughly. And yeah, don't try to memorize, just read it thoroughly like a storybook. and then just solve 20 questions every day. And when you are solving 20 questions every day, make sure that whether your answer is correct or incorrect, you read the solution. That whether if you were right, how did you go right? If you were wrong, where did you go wrong? Okay. Okay, Arun, I hope I'm clear.
Yes, sir. Clear, clear, sir.
All right. Okay, let's start. Okay. So we'll start with intercorporate investments. We'll start with intercorporate investments. Today it is just a 1 hour session, Arun. It was just primarily an orientation. I just wanted to, brief you. Tomorrow onwards, it's a normal 3 hour session, Monday, Tuesday. Okay.
Okay, sir.
Now, intercorporate investments. What is intercorporate investments? Now, here, Arun, you need to think like an accountant. Okay. You need to think like an accountant that you are, uh, you know, an accountant in some big four and you are preparing the accounts of a company. So, how do you need to uh, transact accordingly or report accordingly? So, basically, that is the style of thinking that you need to follow. Now, intercorporate investment. What does this word mean? Intercorporate, amongst the corporates, amongst two companies, whatever transactions are happening, like I am buying shares in your company, that is an investment, right? Now, what is the nature of that investment? How I will report it? That is the overall discussion in this chapter. So basically, if you see, so think we are a company and we are making these investments, as in the investments which I'm going to discuss, and you are the accountant. So what are the types of investments or nature of investments? See, one is investment in financial assets. Which is covered in IFRS 9. Now, I'm not here to teach IFRS 9 or IFRS 2. I'm just giving you the name. The next one is investment in associates. I'll explain all of it one by one, don't worry. Investment in associates. Third one is investment in joint ventures. And final one is investments in subsidiaries. Okay. These are the four types of investments which we are going to discuss. Now I'm going to elaborate on this as we move forward, but I'll go pretty slow today. I just want you to get comfortable with the subject and gradually we will push it. So basically, IFRS 9 talks about two things: investments in bonds of another company or investments in equity of another company. Bond is basically a loan, a debt which you are giving to someone. Equity is basically What is the nature of this investment? See, understand, this is from level 1. It is a passive investment. You own less than 20% shares in the company. By default, by default, treat it as fair value through profit or loss. So this transaction, if your question clearly says you are investing in financial asset, and it will clearly tell you that, okay, basically how much, I mean, how much you are planning to own. If you own less than 20%, then it is treated as a passive investment. So your holding in a company talks about what is the nature of transaction you will report in your books of accounts. Okay. Am I clear till here, Arun?
Yes, understood, sir. Clear.
Okay. 1 second. So basically, another point which I would like to add is, you remember what is FVTPL, fair value through profit and loss, where all the income is reported in the, or losses are reported in the income statement. No OCI is created. Do you remember this from level 1?
Yes, sir.
Partially, na?
If the assets are say, if assets are holding, if we are holding the asset, we'll treat it a way. If we are selling the asset, we will treat it another way. Is it?
Yeah, I'll show it to you in detail, but yeah, you are in the
Mm,
right track. So remember, it will be treated as a fair value through profit and loss. That is realized gain or loss, unrealized gain or loss, interest income, dividend income, everything goes to income statement. No other comprehensive income is created. Okay.
yes, sir.
And if you choose OCI, it is irrevocable. Once you have classified it in OCI, suppose you have transferred it to OCI or you have classified it as OCI. Once you have classified it as fair value through OCI, this investment, then it's done. Khalas. Then you cannot change the nature. It is fixed. So that is what investment in financial assets talk about. That is when I'm investing in less than 20% shares of a company, or when I'm buying the bond of a company, I will treat it as a financial asset, and I will just simply report it as fair value through profit and loss by default. So the default option is FVTPL. But if the default option is not something that you like, you choose OCI, then once you have selected OCI, it's done. So basically, that is the overall idea. Now, investment is associate is basically when you own 20 to 50% of a company. That is more than 20 and up till 50%. This is what, less than 20, right? So from 20 till 50, 20% till 50%, if you own, it is called investment in associate. There we will follow something called equity method, which I will show you in the upcoming slides, maybe in the next class, because today we'll not reach there. Now, this is basically called significant influence. Hi, Nitesh, am I audible? Hi, Nitesh, am I audible? Hello, Nitesh. Oh, okay, okay, no problem. Thank you. Thank you for the response. Okay, 1 second, guys. Okay. So this is the overall discussion. Now, Nitesh, you have just joined, so I have given already a brief on whatever we were discussing, and you can watch the recording of the initial part, but you'll not face a problem since you have an accounting background. So investment in joint venture is basically 50-50 ownership. So you own 50% of a company. So that is called joint venture or joint arrangements. Now, there is a less space over here, so I will write about joint arrangements over here. Now, what is joint arrangements? Arrangement is called shared control. What do you mean by shared control? Investment in joint venture, equity method, investment, or let's write it this way, under rare circumstances, proportionate consolidation method. Under rare circumstances, proportionate consolidation method. Okay, am I clear till here, everyone? Proportionate consolidation method is something which I'll explain you as we move forward. Equity method is something which I'll explain you as we move forward. I am just giving you, it's like an index, let's put it that way. I'm giving an overall idea of the chapter. Today it is an orientation session, so I'm not stretching it today. 1 second. Okay. Now, next one is investment in subsidiary. Investment in subsidiary, guys, is basically, you must have heard this sometime in accounting. If you own 51% to 100% of a company, it is called investment in a subsidiary. That other company becomes a subsidiary of your company. So here you apply acquisition method. Acquisition method. Here I will prepare consolidated financial statements. Okay, here I will prepare consolidated financial statements. So this is the overall idea of the chapter. Okay, I've not started the chapter. I wanted to give you an idea of whatever we are going to study. So investment in joint ventures or joint arrangements where you have 50-50 investment in subsidiary where 51 to 100%, investment in associates where you have investment of 20 to 50% and investment in financial assets where your investment in a company's stock is less than 20. So as per your proportionate holding, your categorization of investment is done and the financials are prepared. So as I told you, your style of thinking is think like an accountant of a company who is making investments. Okay, I hope I'm clear till here. Okay, now let's understand a bit of it where we'll talk about the first one, investments in financial assets. What is your understanding of an investment in financial assets? See, suppose, have you heard the name of Saudi Aramco? Now, if suppose Saudi Aramco has a team of charter holders who is managing their money, okay, so if the fund is investing money in bonds and it is considered as they are writing it as they are planning to hold it till maturity. So that means what? Held till maturity bond is what? Amortized. Remember from level one? A bond which you are holding till maturity is what? Reported at amortized cost? Yes or no? CFA level 1, I had taught this. Both of you have studied from me only, so you should remember. Yes, no, anything? Nitesh, do you remember? Investments in financial asset, debt, equity. Now, understand classification of debt investment. For equity, I have told you already, passive, that is, it's a passive, you are a passive investor. You don't even own 20%, you own less than 20%. So you are considered as a passive investor. Now in debt instrument, they are writing a clause, not a clause, basically two conditions or two tests to classify you yourself as a debt investment. You need to pass two tests. One is a business model test. Another is a cash flow characteristic test. Business model test and a cash flow characteristic test. What is this? What is a business model test? See, in business model, there is something called held to collect. HTC means held to collect. That means holding it till maturity. Holding the bond till maturity. You will not sell the bond. You are holding it till maturity. Another is held to collect and sell. So held to collect means what? We are keeping the bond in our hand and we'll get all the coupons and we'll get back the par value on maturity. Held to collect and sell is say, remember mortgage-backed securities? Remember mortgage-backed securities? What was mortgage-backed securities? Mortgage-backed securities were basically created how? The banks were selling loan portfolios to SPVs, and SPVs were selling those loan portfolios packed in a mortgage-backed security. So basically, banks were holding these loan portfolios to sell. So that is what? Held to collect and sell. Example, in case of MBS, homeowners loan portfolio was sold to SPEs. That is why held to collect and sell. Here, holding till maturity, receiving all the coupons. Okay, am I clear till here? Nitesh, are you understanding? Okay. Okay. Now recap. Recap. See, I'm giving you a recap today. This is all level 1 step stuff, not tested in the exam. In level 2, this will not be asked. They assume you know it. But I have to remind this to you because if this is discussed, you should be aware. This is something which I used to write in level 1 also. I hope by writing it, you might be able to recall. Amortized cost, FVOCI, FVPL. Now I'm writing what? BMT, business model test, cash flow characteristic test. Now I think I did not discuss cash flow characteristic test, right? So let me talk about cash flow characteristic test. You have understood business model test. What is your business model? Are you investing in the bond to hold it till maturity? Or are you investing in the bond with the intent to sell it in the future? Next is cash flow characteristic test. Sole payment of principal and interest. Non SPPI, example, convertible bonds. See, what is SPPI? Sole payment of principal and interest. Basically, an option-free bond, a straight bond, which gives me interest and principal. That is the cash flow characteristic. A straight bond, a straight bond which gives interest and principal. And this one is bonds converted. Remember convertible bonds which can be converted into shares. Bonds converted into shares. Cash flow characteristic is what? It is not a typical coupon and principal. Once you convert the bond into shares, you make money how? A, price appreciation. B, dividend. Getting it? Am I clear till here? So when I do these two tests, then I decide in which category do I need to put this bond. Is it a part of amortized cost? It is a part of FVOCI? Is it a part of fair value through profit and loss? So basically, okay, I'll write it here. I forgot I've drawn this. Recap, not tested in the exam. So I'll amortized cost, FVOCI, FVTPL. So what will I write? Business model test, cash flow characteristic test. So if my business model test is saying held to collect, I'm holding it till maturity. And my cash flow test is saying SPPI, it's a straight bond. I want to keep getting coupons and principal. This clearly is shouting at the top of its voice and saying it's a bond which needs to be reported at amortized cost. That's all you need to do. Simply amortize it. Don't do any calculation of fair value minus purchase price, any gain or loss, nothing. Simply amortize cost. Whatever you have paid, that is the cost that will be reported. You will report your coupon as income and story is over. Because on maturity, you will get the par value. OCI is held to collect and sell. Suppose as per business model test, it is saying held to collect and sell. You are clearly specifying, I'm buying the bond, it is an available for sale bond. You are buying the bond, I will sell it if I want to. I am not an aggressive seller, but if I find the opportunity, I can sell it. So held to collect and sell. And here SPPI. That is obviously, I am buying a bond, I may sell it, but I'm not eager to sell it. That is why held to collect and sell. But in cash flow test, it's not a convertible bond. It's a normal straight bond which is paying coupon and principal. But in fair value through profit and loss, it is definitely a non-SPPI. In business model, it can be anything. Whether you write held to collect, whether you write held to collect and sell, it does not matter. If it is a non-SPPI, it is a fair value through profit and loss. Because understand, it is common sense. If I am saying fair value through profit and loss, I am talking about trading. So that conversion feature automatically jumps into it. Whether I report the bond as held to collect or I report it as held to collect and sell. If it is a convertible bond, I convert the bond into shares and I get price appreciation on stock, I get dividends. It is a clear cut profit and loss column entry for debt instrument. Getting it? Decision to classify based on judgment. So this is very subjective. You can easily say, sir, why not HTC, why HTCS or whatever? How are we classifying it? That is again based on judgment. That is upon the company's investment strategy, the style of investing they follow. Are they an aggressive investor or a passive investor, whatever. So completely based on judgment, and this is a very subjective statement. Manipulation can happen over here. Will not deny that fact. So decision to classify is based on judgment. I hope I'm clear here. Hello? Yes, no, anything? Now, last slide for today. As I told you, today is just an orientation session. So I will not teach for more than an hour. I want all of you to I just wanted to launch the batch today. We'll study aggressively from tomorrow. So, accounting for investment in financial assets. Okay, by the way, I have a question. On Monday and Tuesday, not this week, from next week, instead of 8 to 11, if I make the class 9 to 12, is that okay for both of you? Because I see Nitesh is traveling from office. So maybe by 9 you are at home so that it's easy for you. Because 8 to 11 or 9 to 12, it's not a big deal. I can manage it. Uh, is it okay for you, Arun? Okay. Then I will check with my team if we can accommodate that. Not tomorrow, okay? I don't want to change the link and everything for this week. Next week onwards, I will just ask them to do it. So IFRS classification. So how do we account for investment in financial assets? See, IFRS classification, balance sheet value. Just give me one moment. Unrealized gain or loss, realized gain or loss, interest or dividend, and basically US GAAP classification. So just if you remember, in IFRS and US GAAP, just the names were different. In IFRS, we used to write amortized cost, FVTPL, fair value through profit and loss, FVOCI. And in US GAAP, we used to write held to maturity, available for sale. Sorry, let me once. Yeah, available for sale. Let me write available for sale with OCI. Should be in sync. So available for sale, held for trading. Do you remember this? In level 1, I had drawn something similar. So here in balance sheet value, balance sheet, I'll report the numbers in case of amortized cost at obviously amortized cost. But in case of FVTPL and OCI, I'll report at fair value or market value. We will also do a full length example on this tomorrow. Unrealized gain or loss. If you are buying a bond and you are holding it till maturity, how will there be an unrealized gain or loss? So not applicable. In this case, it will go to income statement. In this case, it will go to OCI. Realized gain or loss, everything goes to income statement, income statement, income statement. This is also going to income statement. Remember this from level 1? Do you remember this from level 1? This is an exact copy of my level 1 slide. I have not written anything new in this slide. So in amortized cost, suppose I buy a bond on 1st of January for $1,000 par value. I'm talking about amortized cost. After 1 year, the value is 1020. I'm least bothered about the value after 1 year because I have bought the bond, the par value of which is 1000. My purchase price is the amortized value basically. I am least bothered about the market value because I'm going to hold the bond till maturity. And what am I going to get? 1000 is the par value and the coupons. So that is the only concern for me. I am not concerned about the market value or fair value. Okay. Fair value does not matter. Am I clear till here? Nitesh and Arun, am I clear till here? Anyone, any questions till here? All right. So we'll keep it till here for today. Nitesh, I would just suggest that watch the recording once, because the initial 30 minutes you should listen it. You'll get an idea about the program and how you need to approach it. Everything I've discussed in the first 30 minutes. So just try to watch the recording once you get it. And yeah, we'll meet tomorrow at 8 o'clock, same time. Okay. It should be uploaded by tomorrow. Don't worry, tomorrow your knowledge will not be affected even if you don't watch it. It is just for, getting a basic idea about the program. But try to join the class on time. That is why I have changed it from next week to 9, so that it's easy for you. Okay. Okay. Good night, guys. See you all tomorrow.